So Jim, we were just talking before we got on camera about the market psychology here, and I was saying I think this is a really hard place for the retail investor. You know, you have better economic data, but you
Right.
have continued bad headlines. How do you deal with that?
Well, as long as numbers are coming down, which they are, you can't like the market as much as you'd like. In other words, you take a look at what we hear about Apple, and we hear numbers coming down and we get a downgrade. Apple's the most important stock in this market. So that's an umbrella for a lot of other names. And what you see is that if you don't have the fundament of the numbers going higher, and you do have the radiation story and the Bahrain story, then you're kind of being heroic to buy. And I don't like to be heroic. I like to be seasoned, and I like to be calm. And the idea of like making a stand is very bad here. We're not down that much given what's going on. And every time we do come down, it seems on very light volume, and buyers do come in. I think you default to yield. I think you rank your stocks. I think that you recognize that we probably have to go back down to where we were yesterday at one point or another. And accept the fact that you're going to have a lot of headline risk, and if you can't handle it, then scale back.
Well, that's my question. For an investor who doesn't want to be a hero but doesn't want to miss anything either, how much do you keep on the sidelines, and then how much do you put in?
Well, I think that this is time for a hefty cash position. I was going over it with Stephanie Link this morning. We also have to make our distribution by the end of the month for our charitable trust, and we did make a lot of money. We don't want to give that back. We have to sell to do a rebalancing, and I want to maintain a cash position that allows us to be able to buy when a terrible headline comes out of Japan. There will be many terrible headlines until this thing gets under control. And even the term under control is not a real term.
Right.
And there's tremendous, just so you know, in terms of behind the scenes, money managers are fighting with each other on this. They're like furious that they can't come to grips with what's going on with the reactors. And some people are being very ideological about it. Some people are saying, look, this is just going to be Chernobyl. And, you can't even put the facts out there without being controversial. So in that kind of environment where there's dueling science and there's numbers cutting, just be careful. Be very careful here.
And you mentioned, dividends and being careful. And so it makes me think of sectors that would be more or less, and I quote, immune. I look to say, housing or retail. It's just sort of
Housing
U.S.
actually
based.
doing better. I love the housing number today. Anything that makes it so there's fewer houses being built is good. Whether to want to own the housing index is very hard. But remember, the market will have a downward bias because of this. But when it gets down too far, we see what happens. Buyers come in. So what I'm saying is that the retail investor has to look into his or herself. The headlines, you have to be prepared for a headline that says meltdown in progress. Because meltdown is in progress. I mean, that's what's happening. I mean, it's like the question is what kind of radiation, will Tokyo panic? And if you can't own it with knowing that tomorrow it'll say the meltdown happening, because it will, it's easy headline to say, or that Bahrain intensifies, sell. Just sell some stuff.
All right.
Sell
Thanks,
some
Jim.
stuff.
I appreciate that.
Yeah.